So what happens when a market that's flying high suddenly goes into an absolute freefall? Well, today we're going to dig into the day gold and silver had a historic plunge that pretty much came out of nowhere. Let's piece this puzzle together. Just look at this number for a second. Negative 30%. That's how far silver plunged in one single day. And I mean, this wasn't just a small correction or a little dip. This was a full-on brutal collapse. One of the worst days for the metal in decades. So, the big question is, why? What on earth could trigger a sell-off that violent, especially when it happened right after the market was hitting all-time highs? All right, let's play detective here. We're going to follow the clues and figure out exactly what went down.
Okay, first things first. Let's survey the crime scene, so to speak. Because, this wasn't just some bad day for traders. This was a record-shattering nosedive that caught pretty much everyone completely flat-footed.
The scale of this is just wild. Gold got absolutely hammered, right? Down 9 to 11%. To find a daily drop that steep, you have to go all the way back to 1983. But silver? Oh man, silver was the absolute epicenter of this earthquake, down a staggering 28 to 30%. We're not talking about just a bad day. We're talking about a day that's going to be in the history books. And the crazy part is how fast it all unraveled. On January 28th and 29th, there was total euphoria in the market. Gold and silver were hitting new record highs. But then, late on the 29th, you see the first little cracks appearing as some folks started to take profits off the table. And then, boom. January 30th. The floor just completely dropped out. A total, violent reversal. So what kicked this whole thing off? Well, the first domino to fall wasn't some dry piece of economic data. It was a huge political shockwave that ripped through the financial system.
And here it is, the trigger, the spark. President Trump announced his plan to nominate Kevin Warsh to take over as the head of the U.S. Federal Reserve. And that one single announcement, it sent an absolute shockwave through the entire financial world.
So why did one name cause so much chaos? Well, it all comes down to expectations. Think of it this way. The market was vibing to a DJ, let's call him the Powell Fed, and everyone knew his playlist, aggressive, continued interest rate cuts. The market loves that music. And then, all of a sudden, someone gets on the mic and says, new DJ. And this new guy, the Warsh Fed, he has a reputation for being way less likely to keep those easy money tunes playing. The music changed in a flash, and the whole mood of the party went with it.
And that's the key, right there. All those hopes for big interest rate cuts, poof, gone. When that happens, the US dollar gets a boost. And suddenly, holding something like gold, which doesn't pay you any interest, starts to look a lot less attractive. I mean, why hold a shiny rock when you can get a decent return somewhere else? The entire appeal of gold and silver just evaporated, literally, overnight.
But here's the thing, the Fed news wasn't a solo act. It was part of a nasty 1-2 punch that morning. Right around the same time, a key piece of economic data dropped, and boy, did it add a whole lot of fuel to the fire.
Okay, so almost at the exact same moment as the Fed announcement, we get new inflation numbers. The Producer Price Index, the PPI, comes in way hotter than anyone expected. And the market's reaction? It was like something right out of a textbook. The US dollar shot up, and US Treasury yields, the return you get on government bonds, they started climbing.
And for precious metals, this is like the worst possible combination. Here's why. A stronger dollar makes gold way more expensive for anybody buying it with a different currency. So, less demand there. And at the same time, those higher treasury yields, they're basically screaming at investors, hey, over here, come get a safe, guaranteed return. So holding on to gold or silver, which pays you zero, suddenly seems like a really bad idea.
Okay, so we've got our spark, the Fed news and the inflation data. But what turned a small fire into a full-blown inferno? To understand that, we have to look under the hood, at the market's plumbing. This is where the real gasoline got poured on the flames. To really get what happened next, we have to talk about something called a margin call. And look, it sounds complicated, but it's not. Imagine you bet $100 on a football game, but you only put down $10 of your own money and borrowed the other 90. If your team starts losing, badly, the guy you borrowed from is going to call you up, sweating, and say, hey, I need more cash from you right now to cover this losing bet. If you don't have it, you're forced out of the bet. In the market, that means you're forced to sell your assets immediately at whatever the current terrible price is. And on that day, all these things came together to create an absolute perfect storm. First, you had a stampede for the exits, everyone trying to cash in their profits at once. Second, thin liquidity. It was the end of the month, and there just weren't many buyers around to absorb all the selling. Third, the big one, forced deleveraging from all those margin calls we just talked about. People weren't selling because they wanted to, they were selling because they had to. And to top it all off, the exchanges had already raised the cash requirements to trade, which just amplified the forced selling even more. It was a brutal downward spiral.
So, wow, after a day of historic carnage like that, you have to ask, what now? Where do we possibly go from here? Is this the end of the line for precious metals, or was it just a really, really nasty correction? But here's the interesting thing. Even after that absolute bloodbath, you have a lot of strategists saying, hold on a second. The long-term story for gold, it hasn't really changed. They're pointing to ongoing geopolitical risks, concerns about the massive U.S. debt, and they're arguing that those fundamental reasons to own gold are still very much there. So maybe this crazy day was just a blip on a much longer radar screen.
So, looking forward, here's what everyone is keeping their eyes on. First, the new Fed chair's confirmation process. That's huge. Then you've got the usual suspects, the next big inflation and jobs reports, and of course, everyone's going to be watching liquidity like a hawk and paying close attention to any more changes in those critical margin rules. These are basically the road signs that are going to tell us which way the market is heading.
And that really leaves us with the million-dollar question, doesn't it? Was this whole thing just a freak accident? A perfect storm of bad news, bad timing, and forced selling that created a temporary shock? Or did we just witness a fundamental, long-lasting shift in the entire story for precious metals? That's the question we're all left with. And honestly, only time is going to give us the answer.